Have you seen those videos saying you can buy a house now with no credit score? Let's clear this up because there is a huge rule change heading into 2026. But if you misunderstand it, you can still get denied, waste months, or get approved with a rate that makes you hate your own payment. My name is Evie DeJesus. I'm a realtor in North and South Carolina, and I'm going to break down what changed, what didn't, and what it means for you if you've been worried about your credit score not being good enough. Make sure you subscribe for weekly videos. Now let's jump back in. So here's the big change in plain English. Starting mid-November of 2025, Fannie Mae's Desktop Underwriter, DU for short. Side note, when you hear me say DU, we're talking Fannie's system of approval, okay? So the DU stopped requiring a minimum third-party credit score for loans submitted through DU. That's why you're seeing headlines like, no credit score needed. But here's the part that headlines are conveniently skipping. This is not a magic. Everyone gets a mortgage switch. DU still evaluates risk. Fannie Mae is basically saying instead of one hard score cutoff being the automatic gatekeeper, DU can evaluate the overall profile using credit risk assessment approach. So what does that mean for you? It means if you have a lower credit score or if you have thin credit, you may not be instantly dead on arrival in the Desktop Underwriter the way many buyers used to be. And that's real. But now let's talk about what has not changed because this is where people get burned. Number one, lenders still pull your credit report. This is not credit scores don't matter anymore. Don't get it twisted, all right? Let's say your history is messy. Late payments, collections, high balances, new debt popping up. Yep, you can still get denied. But listen, even if you get approved, that messy history can show up as a worse rate, stricter terms, or extra conditions. Number two, pay attention. Lenders can still have overlays. Even if Fannie's DU doesn't require a minimum credit score, a specific lender might still require one, or require more reserves, or require a different risk profile to approve you. That's the lender's policy. Number three, this is about Fannie Mae and Desktop Underwriter. It does not automatically rewrite every guideline across FHA, VA, USDA, Freddie Mac, or non-QM products. Those programs can have different rules and different underwriting approaches. Now, who does this rule help the most? This can be for people who are financially responsible but don't fit the perfect credit score box. People who avoid credit cards, people with limited credit history, younger buyers, or people who are still building a U.S. credit footprint. But listen carefully. If you hear no minimum credit score and think you can ignore credit behavior completely, that's how you end up getting denied or getting approved in a way that hurts you. So here's the safest way to move right now. Do not self-reject. Don't keep renting for another year because your cousin said you need a certain score or because a headline made you think either guaranteed approval or guaranteed denial. Instead, get a real financial review with a trusted lender who will look at the entire file: income, debts, savings, down payment, and credit history. And they will tell you what's realistic for you under the current guidelines. Hey, real quick disclaimer. I'm not a lender and I'm not an attorney, so this is not legal nor financial advice. This is consumer education, so you don't make a decision based on internet noise. Now, if you want to connect or need a trusted lender, use the links in the description and I'll point you to a solid local lender and help you build a smart plan for buying in North or South Carolina. And make sure you subscribe to my channel because I post straight up North Carolina real estate guidance so you can make moves with facts, not fear and fantasy. Later, y'all.